And so the main disadvantages alone is that restriction in accessing the capital. That is, with respect to a company, that accessing capital is very easy because it is a very, complex structure. At the same time, the capital aspects of a company are very separate from its very own functions. Directors need not change, who are the main governing authorities, whereas in case of LLP, if you want to raise capital, you can only do it by inducting that person as a partner, which means the entire governing functions of the LLP changes. So if you want to find a person and then raise capital, you must be willing to accept that that person will also come into regulating the business. So accessing capital is a little restricted. And second thing, shares are something which is widely accepted. Anything, investing in an LLP is still a new trend where people may not be, comfortable about, because they don't know how to sell the shares of the LLP, how to sell the contribution in the LLP in the market. Because if you want to invest in a company, you can go ahead, list the shares, and then after listing, you can sell it freely to another person and then come. Whereas in case of an LLP, the transferability of the partnership share is very, very, very difficult. Okay, so if you want to access funds, if you want to bring in outsiders, if you want to bring in a lot of other investors to the company, to the business, company would be the best option. Whereas in case of a partnership, that's not possible. Be it a regular partnership or an LLP, the core structure is only based on an agreement. So every time a new person comes in, all the partners have to execute a new agreement, or rather a supplemental agreement, and then move forward with it. That is going to be very difficult. Okay, and every time a person goes out, all the partners have to sign. And the complexity it's not there in Companies Act, because there is no complexity relating to that. If at all a person wants to get in more number of members, they should go to company. Or if it is only with respect to close net of people, okay, and they would want to carry on business, then they can follow this LLP. Basically, this is an alternative to a small family-oriented private limited company. LLPs can be alternatives to small family-oriented or close net of people to whom a private company caters. Okay, if you want to go big, always company is the best method. And restrictions in FDI, foreign remittances with respect to partnerships are not possible, because if you read FEMA, investment in partnership is prohibited by a foreigner, that is an NRI. Okay, so if you want money from persons residing outside India, it is not possible. Only in case of companies you can go ahead and then do it. Okay, and exit opportunities are not easy for LLPs in default of filings. This is two things. Basically, they talk about closure of LLP. But I would like to add another point, where even if a person wants to go out, so if a partner wants to go out of the partnership firm, that is LLPs, it is going to be very difficult again, because he needs to get the money back, he needs to get sign all the documents that he is going, etc., etc., because it is a contract. Basically, it is an underlying contract. You need to modify the contract. The entire modification process is going to be a little difficult. Okay, whereas in case of companies, all you need to do is sell the shares and then move away. You have a share, sell it to another person, you can move away. As simple as that. There is no requirement, there is no legal requirement to intimate it immediately and all to the government, etc. But whereas in case of partnership, we will be seeing how change in partners happen, but it's going to be little complicated when it comes to LLPs. And limitations on external commercial borrowings. Just like no FDIs, borrowings are also not easily possible, because there are so many restrictions when it comes to LLPs. The reason why there are so many restrictions with respect to LLPs or general partnerships with respect to FEMA, that is accessing the foreign capital, is that it is not highly regulated. Because it is not highly regulated, government will not have an overview as to what it is doing and how the funds are being utilized and what is the position of the LLP. so they are not happy to give for access to the foreign funds to the LLPs. Whereas in case of companies, it is highly regulated by Companies Act. If you want to see what is the balance sheet, if you want to see how the disclosures are, etc., everything, it is already mandated by the Companies Act, and the companies, the RBI or anyone who wants to go through it will be confident about it because so many provisions are there. I don't have to worry much. Whereas in case of LLP, it's only the deed again. Hardly we have 10 provisions, not more than that, 10 concepts rather, and that is also self-governing in nature, mostly based on the agreements. And suppose you want to start an LLP and you want to bring in partners. Who can be partners? A partners can be anybody, an individual or a body corporate. Okay. There is no restriction that only an individual should be a partner. A partner can be anybody, provided that person is capable of becoming a partner. That is, if he is found of a person of unsound mind, or if he is an undischarged insolvent, or applied to be adjudicated as an undischarged insolvent, and his application is pending in the court of law. In these three cases, the person will not be capable of entering into a partnership. Basically, unsound mind in the sense a person who is insane. Second, adjudged insolvent is an insolvent person. If he is not able to manage his personal affairs, how can you ask him to manage a partnership firm's affairs? Okay. And third is a category where he is yet to be discharged, adjudged as insolvent, but his application is pending. You have already applied. What is the point now? You will come out as insolvent in some time. In the meantime, why do you have to go ahead and then show yourself as a partner in one of the firms? So in these three cases, you can add another point, minor. Okay. These four cases, a person cannot be a partner. Okay. Anybody who does not fall under these four can become a partner. It can be an individual. It can be a body corporate. Okay. A company can also be a partner in an LLP. Okay. Any doubts? And the second thing which is new about LLPs is designated partners. The law has introduced another set of partners called designated partners. Okay. An LLP shall have a minimum of 2 designated partners. Okay. And the designated partners must be individuals. Okay. There is no requirement that a designated partner should be different from a regular partner. Okay. If I am an individual and I am the person who is having the partnership share, that is a share in the partnership, and I am a designated partner of the LLP, then I will be treated as a DP and a partner. Okay. Basically, designated partner is including a partner. The only instance where a designated partner will be different from a partner is that a body corporate is a partner. When the body corporate is a partner, can the body corporate also be the designated partner? No, because designated partners needs to be individuals. So at that point in time, the body corporate can nominate a person to act on its behalf. So that person will act as a designated partner and body corporate will act as a partner. Okay. So if an individual is a partner, okay, he can be a designated partner, but it is not mandatory that he should be a designated partner. An individual can be a partner, undesignated partner, or an individual can just be a partner and not a designated partner. Okay. Second, in case of body corporates can be a partner but can never be a designated partner. How can it access the position of designated partner? By nominating someone. Nominating an individual. Any doubts? So designated partners are basically individuals who are required to be appointed by LLP Act for the purpose of compliance of LLP Act. So if there is any non-compliance, the designated partners will be the first set of people who will be caught and penalized. Okay? Basically a point of contact. If there is a non-compliance, the designated partners are solely responsible. In no way designated partners have higher authority than partners in an LLP. With respect to operations, LLP both designated partners and partners have the same rights, same powers, same obligation, unless the deed specifies something else. The deed is the final mother law, just like how we have Companies Act or something. If the deed says designated partners have more power, then they will have more power. If the deed says partners have more power, they will have more power. But for the purpose of compliance under LLP Act or any other law for the time being in force, designated partners will be held responsible. So designated partners' role is to ensure compliance with law, nothing else. Basically a point of contact from the government's point of view. Any doubts? And at least one designated partner should have stayed in India for a period not less than 120 days during the immediate preceding financial year. Okay. That is, one designated partner at least shall be in resident Indian. And what is a resident Indian? Stayed in India for a period not less than 120 days. Any doubts? And if no person is specifically appointed as a designated partner, all the partners who are individuals will automatically be constituted as designated partners. So at the time of incorporation, you need to specify. Practically speaking, this is not possible, but law says if you incorporate a company without specifically saying who are all the designated partners, every individual who is a partner will be considered as a designated partner. Any doubts? Because body corporates cannot be designated partners. So suppose the LLP is incorporated with 6 partners, out of which 2 is a body corporate, 4 are individuals. The 4 individuals will automatically be considered as designated partners, if at all they don't specify who is the designated partner at the time of incorporation. Any doubts? Minimum is 2. LLP must have 2 as a minimum. You can have more than 2 also. There is no restriction in the limit of designated partners also. And every designated partner shall have something called as DPIN, Designated Partners Identification Number. Just like how we have DIN for being a director in a company, to be a designated partner in an LLP, you should have DPIN. Just the terminology is different, but both are same numbers only. If you have DIN, it is called as DPIN. If you have DPIN, you can use it as DIN. Okay. There is no change in that. Just the name is different. Under LLP Act, you will call the same number as DPIN. Under a Companies Act, you will call the same number as DIN. If I have DIN, I can use the same number as DPIN and become a designated partner in an LLP. If I have DPIN, I can use the same number as a DIN and become a director in a company. Okay. Any doubts? And just like how we have small companies, they have classified small LLPs. So LLPs itself is not having much complaints, so they want to reduce the complaints further for very small LLPs. So they said company LLPs whose contribution does not exceed 25 lakh rupees or such a higher amount as may be prescribed, not exceeding 5 crores. As of now, only 25 lakhs is prescribed. So LLPs not having contribution exceeding 25 lakhs and LLPs whose turnover does not exceed 40 lakhs will be called as small LLPs. Here, in case of small LLPs, whenever you need to file certain forms with the Ministry of Corporate Affairs, certification would not be required. Certification in the sense, whenever you file a form, an independent person, be it a cost accountant, chartered accountant, or company secretary, as the case may be, will have to certify whether the details of the form are correct or not. If it is going to be a small LLP whose contribution is not excess of 25 lakhs and whose turnover is not excess of 40 lakhs, the partners themselves can file. They don't need any other person, independent person, to verify what they are filing. Okay. Any doubts? And you have another thing called a startup LLP. Basically, startup LLP means it is registered under the Ministry of Commerce and Industries with a startup certification. Okay. You have certain criteria to call yourself as a startup. We will be seeing that separately in our SBIL paper. So, if it is registered, you can call the LLP as a startup LLP, and it will be given with certain privileges under the LLP Act. Okay. Basically, with respect to penalties and stuff. Any doubts? So, how do you go about with respect to incorporating an LLP? Okay. Just like how you incorporate a company, the first process is reservation of name. Here also, with respect to incorporating an LLP, name reservation is the first process. Okay. You file an application in form run LLP, okay, for ascertaining the availability of the name. If at all you want to go ahead without reserving the name, you can directly go ahead to the next step. Just like how we do for companies also, where you don't file Spice Plus Part A, get the name, and then move for Spice Plus Part B. You can directly go ahead, combine it, and then move forward with respect to the incorporation. Similarly, here also, you can directly go ahead with respect to incorporation. But if the name is not available, you will have to work on all the documents again. So it is always advisable to file a form and reserve the name. And here, unlike companies where the name is reserved only for a period of 20 days, which you can extend to 60 days, here the name is directly given for 3 months, which is basically 90 days. So from the day where the name reservation order is passed, for 3 months the name is yours. Within 3 months, you will have to start the LLP, that is incorporate the LLP. Okay. And again, no LLP shall be registered by the name which, in the opinion of the central government, is undesirable, identical, or closely resembling to that of other partnership firms, LLPs, body corporates, or a registered trademark which is the subject matter of an application for registration under the trademark. So basically, it shall not be identical or resembling too nearly with an existing partnership firm, existing LLP, existing company, and they use the word body corporates, which means any other legal structure. Okay, and a trademark which is inclusive of marks which are pending for approval. Any doubts? And all this to be kept in mind before applying to MCA for name reservation. And if it is not identical or not resembling too nearly with the other partnership forms, name, LLPs, name, or any other body corporates, name or trademarks, then they will pass a name reservation order. And upon name reservation, you are allowed to file this form called FILLIP. Okay. Here you will specify the details of the designated partners, details of the regular partners, okay, that is people who just want to be partners and who don't want to be designated partners, and the amount of contribution that they are planning to give, bring in, how they are going to bring in, because cash is not the only methodology here. It can be brought in even by way of any goods or assets, etc. So how they are going to bring in, and if they are going to bring in by non-cash methods, that is they bring in one building for the partnership, the building is worth 5 crores and they want to say that use this building as my capital, then is there any valuation report for 5 crores? I can say 5 crores, what if it's only 20 lakhs, 30 lakhs? So valuation and consent of all the partners. Along with this, you will have to file this form. Basically, it will have consent, okay, and if a body corporate is planning to be a partner in an LLP, it shall provide proof that the directors are okay with it by showing a true copy of the resolution. So basically, they want to ensure that they are not stuck in a situation where doctrine of indoor management comes into picture. So if LLP, one director says that I want to start an LLP, signs and then gives all the documents. LLP is incorporated. Tomorrow other directors comes and say that I never authorized him to be the to start the LLP. I never authorized this person to invest on behalf of the company. So whatever he did is false. The LLP or entire document structure needs to be changed. So they are very safe here. You give me the resolution copy that you have passed in the board meeting, and then we will proceed with incorporation of the LLP. So at the time of incorporation itself, government is very clear. If a body corporate wants to be a partner, give the certified true copy of the board resolution stating that they are okay with being a partner in the LLP. Any doubts? Subscriber sheet, which is basically the list of partners, their personal details, etc. Details of the LLPs or companies in which the partner or the designated partner is associated with. Just like how when we start a company, we will have to mention the details where the directors are associated with. Here the designated partners and direct partners association needs to be mentioned. Okay. ID proofs, address proofs of individuals acting as partners and designated partners. Proof of the registered office of the LLP. Just like how we have registered office in Companies Act, in LLP Act also, LLPs are allowed to have a registered office. Basically, registered office is a point where all the communications come. Okay. List of main objects of the LLP, and in case the name is similar to a trademark, copy of the NOC again at the name of incorporation. Any doubts? So this is basically in simple terms, if I have to put more like a data entry form, we'll fill all the details alone, give the ID proofs, give the address proofs, etc., and then file it with the registrar. The person will take note of all the documents that you are filing and pass an order along with the certificate of registration. This certificate of registration is considered as the final order that the LLP has been registered. Okay. And just like companies, it shall come with PAN and a TAN. And in case of any documentary issues, he can ask for resubmission by giving 15 days time, and if you don't submit within 15 days, the application will be rejected. Any doubts? And filing of the LLP agreement. So now, in case of companies, upon passing the order of incorporation and getting the certificate of incorporation, your company will come into existence. No further filing requirement is required. Okay. The only requirement that would be required in case of a company is intimation of registered office. That too only when you haven't specified the registered office at the time of incorporation. You have just specified the correspondent address. Okay. Here it is not the case. So we saw two structure format. One is identification of the LLP by issuing a certificate of registration. Second is the LLP agreement. So now the LLP agreement needs to be filed with the MCA. Okay. If the LLP is not incorporated, you will not be in a position to draft the agreement. Okay. So after the incorporation, you should draft the LLP agreement and get it signed from all the partners and file it with the MCA through e-form 3 within 30 days from the date of incorporation. Okay, within 30 days from the date of incorporation. And generally, the LLP agreement shall have an interpretation and definition clause, a designated partners clause. The designated partners clause shall mention the details of the persons who are designated partners and partners at the time of incorporation. Okay, and what is their personal details such as place of residence, age, etc. and name clause of the LLP. It shall clearly specify the name of the LLP and also the procedure to change the name. Okay, this is where LLP differs from companies. There is a legal requirement as to how to go about with respect to the name change, but it is the LLP agreement which will say how the name change procedure needs to be followed internally within the LLP. We saw name change procedures in Companies Act. You need to pass a board resolution, you need to pass a special resolution, and you need to file an e-form with the ROC, that is MGT 14. Okay. Here, the board resolution, special resolution and all are already fixed. You cannot change it. You can never change it. Whereas in case of LLP, board and special are internal approvals within the company. Correct? In case of LLP, the internal approval is decided by the agreement only. If the agreement is silent, all the partners should agree. If the agreement says majority of the partners agree panna podum appadina, majority agree panna podum. As simple as that. It is only what the agreement says. Okay. Changes in registered office. It shall specify the registered office and again the manner of change. Just like how we saw multiple procedures for shifting of registered office in case of a company. Here also there are multiple scenarios, but the internal process with respect to an LLP, where the internal process will be board resolution or special resolution, correct? That is already defined in a Companies Act. Here that is not defined. Partners needs to agree, that's all. How the partners agree is based on the LLP agreement, ideally all the partners. Okay, all the partners would agree. And business of the LLP, it shall specify the business of the LLP and it shall specify the capital contribution. And there is a separate clause for profit sharing ratio. In all the partnership examples that you may have come across, the capital contribution or the capital ratio would probably be the profit sharing ratio. Okay. Here, the capital can be at a different ratio and profit sharing can be at a different ratio. Okay. So, law is also recognizing it and then saying that, see, you may bring capital in 50-50, but one person is going to be a working partner who works all the time. Another person is not a working partner, he is going to be a sleeping partner. So, the profit sharing ratio can be 80-20. Okay. So, it needs to specify what is the capital and what is the profit sharing between the partners, and this shall also include how to reduce the capital, that is withdraw the capital, and how to add more capital. Adding more capital is basically bringing in funds, that's all. Transfer the funds to the company's, the LLP's bank accounts and say this is an additional capital. That's all, as simple as that. So you will need to alter the agreement for it, because agreement will specify what is the capital brought in by each of the partners, right? If the agreement says 20 and 30 as the capital which has been brought in, and let's say they increase it to 1 lakh, now agreement needs to be modified. That's all, as simple as that. Any doubts? Rights and duties of designated partners needs to be mentioned. The LLP Act itself provides the rights and duties. In addition to it, if at all there are any rights and duties that the LLP wants to give it to the designated partners, it can give so. And the manner in which partners are admitted, manner in which partners' retirement is taken on record, manner in which partners' resignation is taken on record also needs to be properly mentioned, and also with respect to removal, expulsion of partners. How do you go about with respect to expulsion of partners? This is something very important, because if the LLP agreement is silent, consent of all the partners would be required in Ramari, it will be taken into picture, and that is very difficult. How do you get consent of all the partners where one partner is being expelled? It is a grey area which is not exactly defined. You cannot be like majority of the partners agree to it, so I will remove the person. It's not going to work out. So, but for that person, all the other partners should agree. Even then, he may file a suit or something stating that it's not properly approved by the partnership firm, etc., etc. So, you need to properly specify how a partner's removal will come into picture, how a new partner should be added. If 50% of the partners agree to it, you can add a new partner, or you need to have 75%, or you need to have all the partners consent, etc. Then only you will have new partners, and you will need to clearly specify. Okay. Unlike Companies Act, where it spoon feeds the person as to how to do it, here it's only you. That is why sometimes it's easy, because even if you make a mistake, it is your liability, not the government's liability. Okay. Remuneration and interest to be paid to the partners. Okay, that also needs to be specified. Bank account details, how the books are to be maintained, how partners meeting should happen, okay, etc. needs to be clearly specified. Here there is no regulation on how meetings should happen. In case of Companies Act, we will have 4-day class also for meetings. Just you specify whatever you want in your LLP agreement, that is how meetings will happen. That's all, as simple as that. And LLP shall contain a provision for indemnity. Okay, basically how it seeks to indemnify, or how the partner seeks to indemnify both ways, to the based on some if there is any fraudulent activities, or if there is any mistake that has happened, how LLP will indemnify the partners, or how the partners will indemnify the LLP. And dispute resolution, this is something which is being widely required right now. If there is a dispute between the partners, how do you go about and then resolve it? Every time you cannot close the LLP and then start a new LLP. So how do you go about and then resolve the disputes amongst the partners? Okay. Duration of the LLP and winding up procedures and general provisions. These are the mandatory requirements that are to be included in the LLP. The law does not say that these needs to be included. To be frank, it does not. But you will have to incorporate all these things and then make the governance process easier, because if you don't include it, law will always treat it as all partners consent. You want to admit a new partner, all partners consent. You want to remove a partner, all partners consent. Change in name, all partners consent. 2 or 3 partners, all partners consent is not going to be a problem. But if the the LLP has 30 partners, 40 partners, getting all partners consent is not easy. Even now, with 4 partners in place, getting the LLP agreement signed is the most difficult practical process. Very difficult. In case of companies, all difficult. 4 partner agreement they will take it so long. They will start doing the business, but they will not sign the LLP agreement. So 30 partners you must imagine the difficulty in getting the LLP agreement signed. So you need to specify how the process needs to be. Okay. And the LLP agreement should be printed on a non-judicial stamp paper, and the stamp value shall be as per the the stamp value shall be as per the state rules. In Tamil Nadu, if you want to incorporate an LLP, it shall be on 1000 rupees non-judicial stamp paper, okay, or 100 rupees. Stamp value should be 1000. You decide on the number of papers, 10, 100 rupees, 1000 rupees. Nowadays, other denominations are not available much, so, and it shall always have 2 witnesses to the agreement. Any agreement that is getting registered shall have a witness, and all the partners are required to sign on all the bottom pages, all the bottom portion of the pages, okay. Because what happens is that if you sign only the last page, what if the pages in between are altered without their knowledge? Okay, so whenever this is not something which is set in law and all, if you don't sign, LLP agreement will not be accepted. But generally also, whenever you guys enter into any of the contracts, ensure that you sign all the pages, because in between they remove a page and then insert another page and then give it back to you. You will not be held liable for that change, because you will know that your sign is not there on the page, which means you didn't sign that page, which means the page is modified. So practically also, wherever you go and then sign the agreement, always ensure you sign all the pages. Just read, then sign all the pages. Okay. Any doubts?
Sir, can witness be a partner?
No, of course not. Witness is a person who is just witnessing it. He cannot be a part of it. Okay. Any doubts?
What is the need to have a very loose business entity like LLP?
Just flexibility, sir. That's all. As simple as that. Because in LLPs, monitoring is there, but it's not as complex as a company. So they don't want to get involved into the day-to-day affairs of the LLP and then make it more complex like a company. Because if at all the Companies Act, if they have to frame the LLP Act, it will again be like a company. So what is the process, or what is the the difference from it? One part is filing of forms with the MCA. Another part is internal regulations. In case of LLPs, internal regulations are left to the partners, but filing of forms is still there in LLP also. Name changing, there is a process. Register offices, there is a process. But the internal regulations are left to the partner's discretion. In case of companies, both the internal governance as well as the external form filing is both specified in Companies Act.
But in that case, what's happening is the doctrine of indoor management has to be very strict, and then that should not be a violation, right? And the monitoring from the LLP Act or the Companies Act has to be more, right? We are giving the flexibility to the business, but at the same time, the monitoring.
The disclose, outsiders may not know what exactly is that is there, but again, this LLP deed is getting filed. So, again, just like how we have MOA and AOA getting filed with MCA, LLP agreement is getting filed. LLP agreement is the mother document. They cannot have anything apart from LLP agreement. So, based on the LLP agreement, a person can enter into contract. So, basically, based on LLP agreement, if a particular director is authorized to sign the contracts, particular partner is authorized to sign the contracts, more than sufficient. The contract will be considered as a valid contract only. Suppose he is not authorized and still you enter into a contract, then it is at your fault, because LLP agreement is a public document. But in case of partnership agreement is not a public document. Nobody will give the partnership agreement. They will never give. What is the capital, what is the profit sharing ratio, and all will be disclosed in that. Nobody will even dare to say that they have an agreement. We are doing it as partners and sold to pay down all along. So that kind of transparency when it comes to partnership you will have. But if you compare to a company, it is nowhere near transparent as a company. Any doubts? We will have a short break. Please make a note of this. Any doubts?
So, can a person be a director and a designated partner at the same time, or?
A director is in terms of a company. So LLP is in terms of, designated partner is in terms of an LLP. So there is no connection between the two. So a person can be a director in one company and a designated partner in one LLP.
Can an object of LLP be changed or reduced?
Yes, sir.
It is not possible in company, right?
It is possible. We saw the object of alteration. How do you go about it? If the funds are pending to be utilized, then exit opportunity needs to be given. If the funds are not fully utilized, or no other funds are pending to be utilized, then all you need to do is pass a special resolution and file MGT 14 within 30 days. Object class alteration of MOA.
So then he'll have the same identification number, right?
So in company they'll call it as DIN, LLP they'll call it as TPIN. That's all. No difference at all. Any doubts? Alteration of the LLP agreement. Any clause in the LLP agreement that you want to alter, let's say the object clause, or let's say the rights and obligations of designated partners, okay, or the way in which meetings are to be held, okay. You are not changing the name, but you want to include a clause relating to how to change the name, or you want to change the name, you want to change the register office. Anything you do will only affect the agreement, because unlike MOA where only certain objects or rather certain items are specified, apart from that, if you are going to do anything, you don't have to touch the MOA in case of companies. Name, you need to change the MOA. State, you need to change the MOA. Other than state, you don't need to change the MOA. Objects, you need to change the MOA. Liability and capital, you need to change the MOA. Apart from these five, you want to change anything in the company, you don't have to touch the MOA only. Correct? Here it's not the case. Anything and everything is there only in the LLP agreement. So anything you want to change, it will automatically have an effect on the LLP agreement. You want to change the name of the LLP, obviously it will have a change in the LLP agreement as well, because LLP agreement will have what is the name of the LLP. You have to alter the LLP. New partner should come in, new partner should bring in capital, change in profit sharing ratio, existing partners going out, anything and everything with respect to change in partners, your LLP agreement is affected. Change in register office, your LLP agreement is affected. How to maintain books, LLP agreement is affected. So we saw 17 items. Change in any of the 17 items will affect the LLP agreement. And whenever you want to change the LLP agreement, you can go ahead and then do so. How? By entering into a supplemental LLP agreement. What is a supplemental LLP agreement? Is basically an additional agreement to the original agreement. So if at all you want to know what is the current LLP agreement, what is the final version of the LLP agreement, you should read the original agreement with all the supplemental agreements entered into by the partners. Okay? Any doubts? The original agreement will not be subject to change. They will not strike it out, remove it, they will not enter into a new agreement and all. The original agreement remains in place. You will then enter into a supplemental agreement stating that the clause number so-and-so of the original agreement shall be modified and read as following. Obviously, they will give the new clause in the supplemental agreement only. For example, let's say in the original agreement, A and B are designated partners. In the supplemental agreement, let's say B is going out and C is coming in. It will say this clause stands modified and it will read as A and C are designated partners. Okay. Just an example I am giving. Change in partnership, this is not the only modification that will happen. There is a series of changes that will happen. Okay. Just an example. If you want to change the objects, similarly the objects of the LLP as per the original agreement stated so and so. Now the partners have decided to change the object, and the revised object clause of the LLP shall read as follows. Obviously, you will have to enter it in the supplemental agreement, and again the supplemental agreement shall be executed on a non-judicial stamp paper bearing the requisite stamp value as per the state in which it is registered. Okay. In Tamil Nadu, it's 1000. And all the partners needs to sign the bottom of the page. Okay, whenever there's a change in the agreement. Any doubts? And if you change the agreement, Form 3 needs to be filed. That's all. As simple as that. There is no different forms and all. Agreement, any changes to the agreement, Form 3. Within 30 days from the date of execution. Whenever you execute it, change it. Any doubts? This is the general provision with respect to altering the LLP agreement. But there are certain specific provisions with respect to 3 instances: name, register office, and partners. Okay. How do you go about with respect to change in the designated partners? Okay, these are the 3 special cases which will be brought into picture, where additional requirements other than just filing Form 3 will be coming into picture. That is, if you want to add a new partner or a designated partner, or a partner ceases to be a partner, or a designated partner ceases to be a partner, then mere alteration of Form 3 would not be sufficient. You shall also file an E-Form 4 stating the intimation of change in the partner's composition. So, E-Form 3 will also come into picture as well as E-Form 4. Okay. 3 is a consolidated update on the LLP agreement. 4 is very specific intimation to the registrar relating to the change in partners. Okay. In 4, depending upon the nature of change, you will have to attach the consent of the incoming partners. If in case of resignation, the resignation letter of the incoming partners, outgoing partners, and evidence of cessation that he has given, and partners have also taken it on record that this person is going out. Then, and in case there is change in details of the partners, such as change in name or change in particulars of the partners, an affidavit from the partner stating that this is the new name, because this the agreement that you have entered into will bear the name of the partners. Okay. Suppose ABC one day, tomorrow he goes to the the government department and changes his name to XYZ. That details needs to be incorporated in the LLP agreement. Again, because it is a contract. You cannot merely change the name of the partner by intimating to the LLP saying a name mari pochi maathikonga. They cannot strike off the name in the LLP agreement and enter the new name and all. You need to enter into a supplemental agreement stating that name change needs to be effected. In that case, proof of name change. And if at all again a partner is a body corporate, board resolution extracts needs to be provided. Okay, for any change with respect to the the body corporate stake as a partner. If it wants to get out of the partnership, board resolution authorizing a person to sign the resignation or the NOC letter also needs to be provided, because the company is not willing to go out of the partnership. But what if one of the directors who is not particularly happy with this designation in the company writes a letter to the LLP stating that the company no longer wants to be a partner? That cannot be taken on record, right? Again, you don't know what exactly happened inside the company. So, whether a body corporate wants to be a partner or wants to go out of the partnership firm, it needs to provide resolution extracts that the board has authorized this action, because only one director is going to sign, correct? And in case a specific person is mentioned to act as a nominee, that is a designated partner of a body corporate, then again a board resolution authorizing that person needs to be provided. Any doubts? So here, in addition to Form 3, because if there is a change in the partners obviously for form 3, obviously LLP agreement is going to be altered. So when you alter the LLP agreement, form 3 needs to be filed as per the general conditions. In addition to it, you need to file form 4. Okay? Any doubts? Change in name of the LLP. The first and foremost process is the partner's approval here. Because you need to file a form LLP RUN for reserving the name. And upon partner's approval, if the deed is silent, again all the partners' consent needs to be obtained for name change. The deed specifies a specific manner in which the partner's consent is to be obtained. That needs to be followed. Second is LLP run. File the form LLP run with the MCA and get the name reserved. Again, it shall abide by all the name guidelines. That is, it shall not be identical with an existing partnership form or resembling too nearly with an existing partnership form or an LLP or a body corporate or a trademark which is registered or pending for registration. Okay? And after the name reservation, the LLP shall file a form called Form 5 to the registrar, who have every right to accept or reject it. Okay, and based on the documentary evidences that you are presenting before the registrar, he may approve the name change and issue a fresh certificate of incorporation, or rather registration, because LLP Act does not use the word incorporation. Fresh certificate of registration. Once the fresh certificate of registration is provided, you shall modify the LLP agreement. Because if the name is pending to be approved, you cannot directly enter into a supplemental agreement stating that the LLP decides to change the name. It is the registrar who should approve the name first. Upon registrar's approval and upon receipt of the new certificate of registration, enter into a supplementary agreement and file Form 3 within 30 days. Any doubts? So the first process is partner's approval. The second process is filing LLP run and getting the name reserved. Third process is application to the registrar in Form 5, and if the registrar is satisfied, he will issue a fresh certificate of incorporation, and upon the certificate of incorporation, enter into the supplementary agreement, because the agreement, LLP agreement, will have the name clause. You will have to change the name clause. So to change it, you cannot strike it out. You will have to enter into a supplementary agreement, and that agreement needs to be filed within 30 days through Form 3. Any doubts? Please make a note of this, friends. Both change in partners and change in name along with the general conditions. Change in the registered office address. Okay. There is no restriction in shifting the registered office to any place within India. All you need to do is get the consent of the partners. Either all the partners or majority of the partners, depends upon how the agreement is drafted. Okay. Foremost thing. The only additional condition that would be required is that if it is shifting from one state to another state, okay, you need to publish an advertisement in the district newspaper. That is one in English and one is principal language in the district, which is basically a vernacular language. At least 21 days prior to the filing of notice to the ROC. Okay. And second condition is consent of all the secured creditors shall be obtained. Two additional conditions in case of shifting from one state to another state. One is advertisement, one in English and one in vernacular language newspaper, 21 days prior to the filing of application. Second is consent of all the secured creditors, not all the creditors, only secured creditors. Okay. And you shall file E-form 15 within 30 days from the date of partner's resolution, and E-form 15 shall have the consent document attached, the copy of the advertisement attached and filed. Okay. 15. And in addition to E-Form 15, mandatorily E-Form 3 will come into picture, because if you are changing the register office, your agreement is altered. If your agreement is altered, you will have to mandatorily file E-Form 3. Any doubts? Another tertiary provisions with respect to reporting aspects of an LLP are maintenance of accounts and annual returns. Generally, you can maintain books either on cash basis or accrual basis, but they have also prescribed a new accounting standards for LLPs on how to account, and you need to comply with it. And it shall only be on double entry system of accounting, no single entry. Nowadays nobody follows single entry, but still law prescribes, so that to ensure that nobody follows single entry. Okay. And these accounts shall be mandatorily maintained at the registered office of the company, either in physical form or in electronic form. And within 6 months from the closure, you will have to prepare the accounts and get it signed by the partners. Manner of signing, who should sign the accounts, etc., are all regulated by the LLP agreement. If the LLP agreement says only these two partners are required to sign, fine, you can go ahead and only those two partners can sign. And within October, that is 7 months from the closure of the financial year, you shall file a statement of solvency, which is basically the financial statements, with the registrar in Form 8. Okay? Any doubts? And if you ask me whether audit is mandatory or not, no, audit is not mandatory. Under Companies Act, audit is mandatory. This is also another relaxation. Audit is applicable only when the contribution is more than 25 lakhs or the turnover is more than 40 lakhs. Basically, it should be not falling under the category of small LLP. If it is a small LLP, audit is not mandatory. If it is not a small LLP, audit is mandatory. When audit is mandatory, in Form 8 also, the auditor should sign and then file the form. If the audit is not mandatory, in Form 8, while filing the statement of solvency, that is your financial statements with the MCA, it is sufficient if the partner signs and files the form. Okay? Any doubts? And the audit shall be done by a practicing chartered accountant and nobody else. Any doubts? And you also have another annual compliance form called annual return, which you will have to file in Form 11 within 60 days from the close of the financial year, which is basically 30th of May. Okay. Auditor? Table. You may no self-certification by the partners. Partners is only not a small LLP.
Appointment form
நீங்க appointment related aspects கேக்குறீங்களா எப்படி பண்ண போறாங்க அப்படிங்க
இல்லை ஒரு நாட் ஸ்மால் LLP இருக்கு அப்படின்னா
Chartered accountant practice la irukna avladha. It does not require any other conditions that 5-year appointment, 2-year appointment, 3-year appointment அந்த மாதிரி எந்த ஒரு கண்டிஷனும் கிடையாது. CA in practice we shall abide by CA guidelines. Basically independent இருக்கணும். Related party வந்து சைன் பண்ணக்கூடாது அவ்வளவுதான். More than sufficient. And every after the closure of every financial year, within 60 days an LLP has to file Form 11, which is basically the annual return. So one thing that you guys have to make a closer look at is that every time the law says days, you also mention it as days in the exam. Every time the law says months, you shall also mention it as months in the exam. Okay? Because 60 days is not equivalent to 2 months. If they say within 2 months from the closure of financial year, due date would be 31st May. Because they have specified 60 days, due date is 30th of May. So, in any provision, not saying this for the purpose of LLP, be it Companies Act, be it any other act for that matter, if the law says days, manually count the days. Even if you are not very sure about it, 1, 2, 3 finger you count it. Don't make mistake on days because that will cost a lot in the exams. Even for complaints, one day you miss it, LLP ku penalties will not come, but if it is some other form, companies penalties will be high. Okay? If the law says days, count it in days. The law says months, count it in months. Okay? And if the LLP's turnover is less than 5 crores or the contribution is up to 50 lakhs, the partners themselves can file the annual return by self-certification basis. However, if the contribution is going to be more than 50 lakhs or the turnover is going to be more than 5 crores, it shall be mandatorily certified by a practicing company secretary. The contents of the form are very simple. What is the obligation that a partner has to bring in? Has he brought in? It is not mandatory that the partner has to bring in the contribution immediately. Let's say I say that I will be a partner and I will contribute 10 lakh rupees. Initially I will contribute 2 lakhs. After a year I will contribute another 3 lakhs. After that I will contribute another 5 lakhs. So this annual return should specify how much I have brought in. Okay? And the turnover must be decided. Okay. The forms are slightly ulta here. Without the statement of accounts, you may not be able to ascertain what is the turnover of the company. And without the audited accounts, no person would be willing to certify. If I am a practicing company secretary and they ask me to certify, without the accounts, how will I certify whether they have brought in or not? Because last year, the total contribution of the partners that are required to be contributed is, let's say, 60 lakhs. And these partners have brought in correctly 51 lakhs. This year they say that they have brought in the 60 lakhs. How will I certify the form? Accounts is not ready. Law gives 6 months time to prepare the accounts. Nobody has audited the accounts. So which means I need to go audit their books, get a true copy that they have already contributed the amount that is required to be contributed, and then I need to certify. Slightly illogical because the forms are ulta. In Companies Act, the forms will be the other way around. First financial statements, then the annual return. Here, first annual return, then the financial statements. But nothing can be done. Sometimes law is not logical, but that's how law is. And another complaint is with respect to Income Tax Act, which you will have a detailed study in your tax paper. But it's provided in your institute study material, so they may ask as to what is the due dates for filing income tax returns for LLPs or intermari. So generally, if the LLP is required to get itself audited, it needs to get it audited on or before 30th of September. If the LLP is covered under transfer pricing provisions, it needs to get it audited on or before 30th of November. And if it is not required to get itself audited, 31st July is the final date. Okay. Any doubts? Any doubts with respect to LLP? We have certain more provisions in LLP, but none of those are provided in your institute study material, basically with respect to winding up and compounding of offences. Okay, so general overview with respect to winding up and compounding of offences is that compounding of offence is basically where you have committed a non-compliance or you fail to comply with certain things and you are levied with a heavy penalty. Okay, in case of small LLPs or startup LLPs, penalties are already less, so you don't have to worry about the quantum. But if you are a large LLP, sometimes penalties may be really high. So if it is very high, you can approach the regional director. It is basically the same RD that will come under Companies Act, or the government is empowered to nominate any other person other than a regional director who is not below the rank of the regional director. Okay, so minimum level is regional director. The government can nominate a higher level person also for the purpose of compounding, and it can be compounded only for offences that involve a fine as the penalty. Okay, if imprisonment is coming into picture, it is non-compoundable. Okay, we'll see more about compounding maybe in your Companies Act lectures, but it is not there in LLP, but still I'm just giving a brief overview just to understand. And in case of winding up, again voluntary wind up is possible. The wind up procedure needs to be mentioned in the LLP agreement. Again, if it is not, then we may have to get the consent of all the parties. Okay, and upon winding up, you will have to file certain forms. I don't want to go in detail about the forms. And tribunal can also order for winding up here. If the LLP is acting in a very fraudulent manner, LLP receives a the government files with the tribunal, or the registrar files with the tribunal stating that LLP is acting in a fraudulent manner or with an intention to deceive the creditors, it can pass an order for winding up. Okay, winding up is a process where assets are disposed, liabilities are settled. Any doubts? Basic crux over compounding and winding up. Compounding in simple terms means reduction of penalty. You go file a compounding application, basically like நான் தெரியாம பண்ணிட்டேன் பாவம் மன்னிப்பு கேட்கிறது. If they say okay, your penalty will be reduced. Okay. Any doubts? Okay. So with this we'll close the class today, friends. We are done with the LLP Act. I will share the PDF. I have certain distinctions, LLP and partnership, LLP and company, etc. Okay, I will share that also. Maybe you can go through for your reference. So with respect to LLP, if I have to give a brief summary again, basically a mix of company and a partnership firm, the flexibility of a partnership firm and the benefits of a company. The major features that are regulated by the LLP Act is incorporation, change in name, change in registered office, change in designated partners, and general change with respect to any of the clauses that are mentioned in the agreement. Okay, so it is a two-layer structure. You register the LLP, then you enter into the agreement, and the agreement is the mother for any LLP. If the agreement is silent, consent of all the partners is required to modify anything. The agreement specifies a specific manner in which you have to go forward with respect to any alterations. You can follow that. Okay. And if you change anything in the agreement, you need to intimate it to the registrar by filing E-Form 3 along with a copy of the original agreement and the supplemental agreement. And if there is a change in the designated partners, E-Form 3 plus E-Form 4 will contain the details of the change in the partners separately. And in case of change in registered office, you need to file E-Form 15. And if it is outside the state, that case alone you will have to get the consent of all the secured creditors, and you need to publish an advertisement in 2 newspapers, one in English and one in vernacular language, 21 days prior to the filing of the application, which is basically E-Form 15. Application is E-Form 15. And along with the general condition, which is basically filing of E-Form 3, will come into picture. Then you need to procedure for change in name. In case of change in name, first LLP run, get the name reserved. After the name reservation, file an application to the registrar in Form 5. And if he is satisfied with the application, he shall grant a new certificate of incorporation. or rather registration, and upon the grant of the new certificate of registration, alter the agreement. Here alone the alteration of the agreement comes after, because only upon the approval you can change the name. So alter the agreement, file form 3 along with the original agreement, supplemental agreement. Suppose you have modified everything, modified many times, and you have, let's say, many supplemental agreements. Law is not specified, or the forms are not specifying as to how many supplemental agreements needs to be attached, etc. Ideal practice, here original agreement means original agreement read with supplemental agreement, so attach everything and then file it. Okay. And you have reporting requirements. One is financial statement reporting, that is statement of solvency, which is basically filing the financial statements with the registrar on or before 31st of October. It needs to be audited if the contribution exceeds 25 lakhs and or the turnover exceeds 40 lakhs, and CA in practice needs to audit it. In case of less than 25 or less than 40, in case of turnover, self-certification is more than sufficient. And annual return also needs to be filed by the LLP 60 days from the closure of the financial year, that is 30th of May. And if the contribution is in excess of 50 lakhs, or if the turnover is in excess of 5 crores, a certification from the practicing company secretary would be required for annual returns. If it is not, then a self-certification would be sufficient. Then you have income tax deadlines. If it is regular audit, 30th of September, transfer pricing audit, 30th of November, no audit, 31st of July. Any doubts? Thank you, friends.